All right, so let's begin the show. Over the past few years, India's unsecured lending segment has become very competitive with banks, NBFCs and financial technology, fintech companies, including several new entrants aggressively growing loans in this category. In the past 2 years, if we see, personal loan grew around 24% and credit card loans rose about 28% on average compared with overall banking sector's credit growth of around 15%. Now, RBI raised the risk weights for consumer credit exposure, particularly for personal loans, by 25 percentage points to 125%. Now, this means that banks now need to hold more capital, increasing the cost of capital for these loans. Both existing and new loans are affected by this adjustment. Now, going forward, borrowers may experience high interest rates and limited access to credit as banks adjust their lending practices to meet the new capital requirements. Let's decode all of this today and understand all the nitty-gritties around this. Also, if you are someone who's looking to take a personal loan, is this the right time? Should you be having a repayment strategy first in place and then applying for a personal loan? Let's understand this. I have with me today Adhil Shetty, CEO, co-founder, bankbazaar.com. Adhil, good evening and welcome to the show. A very important mandate that's coming from RBI, and at a very important time where consumer loan and increasing trajectory of these loans is it's really concerning for the industries and also for the consumers. Let's just first begin with understanding what's the kind of mandate and the change that RBI has introduced.
Right, Kavita, you had a great summary when you just said it right now. The risk weights have increased. Importantly, right, and this is something I think consumers should understand, anyone who's already taken a personal loan and is currently paying it, they're not going to be affected. So while the bank has to increase the capital adequacy on that loan, because your personal loan is a fixed rate contract, if you're paying 13%, you're paying 13%. It's not going to go up. However, right, given that these risk weights have gone up, a very interesting question to ask is now what's going to happen to various consumer segments as these increased risk weights kick in.
All right, now let's also understand. So a lot of reports are also saying that the things have gone back to the pre-COVID, situation where during COVID, obviously, the more focus from the central bank was on growth and not on inflation, which is why the consumption also was given some free hand. So looking at the change now, do you think it is also a sign of the economy going normal and also a time where RBI is also trying to say that, let's just get back to our pre-COVID levels and exactly the offtake of these loans with the way it was at that time should now be because of the consumer loans which you explained are going up?
Yeah, I think that's a reasonable way of looking at it. Now, let's look at exactly what the RBI said. So the RBI said the sector is growing at 15%, but unsecured personal loans are growing at 24%. What they're saying is all segments and all sub-segments should grow at the same pace. So I think what we clearly understand from this, right, is RBI wants growth. It just wants a balanced growth between all segments. So what it's saying is that, on the unsecured personal loan, perhaps the 24% should be lower and closer to the overall growth rates of 15%, but still 15-20% growth rate is still large growth. Let's keep that in mind. Now, the important thing for the new borrowers, right, because you called that out when you first spoke, is I believe new borrowers will fall into 3 segments. And it's very important to understand this if you're someone thinking about a personal loan. If you're a super prime above credit score 750 consumer, I actually believe that nothing is going to change for you because this is the segment that has the lower loss rate. Yes, the cost of capital might go up by 0.2 to 0.4%, but this is a segment which is highly competitive. Many lenders, banks, NBFCs are giving loans, giving credit cards. I actually believe if you're a 750 plus credit score consumer, you're going to be fine. This is why, we constantly keep telling people at Bank Bazaar, please check your credit score and improve it so you get above 750. That's the top of the pyramid, all right? Now, if your credit score is below 650, I think what the RBI is saying is we need to be careful about the risk we're building up. So I genuinely believe that in the small ticket personal loan, where 8,000 rupees, 10,000 rupees, it's an impulse loan, you're rolling your loan. that area, right? Now prudence is going to start coming in because of the higher capital requirement. So I feel that any high risk lending potentially is going to slow down or stop. So anyone who's been rolling over their loans, taking one loan to pay a new loan, taking multiple 10,000 loans, I think that segment is going to start slowing down quickly. That's the area the RBI has called out. All industry reports are saying that that's the area that people are scared was growing too fast. Now, in the middle, right, I think time will tell what's going to happen, because once you stop the high risk segment, that alone could take care of the additional cost of capital. So in the middle, right, what we're going to see is a very calibrated approach where banks and NBFCs are going to see saying, hey, have I saved enough on the loss rate in the high risk segment, or do I need to start increasing the rate, commensurate to the increase in cost of capital in the mid segment? But that's going to take 3 to 6 months to happen, and it's going to be calibrated segment by segment. So the above 750 consumers, nothing is going to happen. I believe you're going to see the same competitive rates. Below 650 consumers, you're going to see less offers. And in between, right, let's wait and watch to see how it goes in a calibrated fashion.
Also, talking about these fintechs, because what we've also seen is a huge interest from people. Everything is available just on the matter of a click. You want to buy a phone, or you want to buy, even you want to order anything online. How do you think this will also modify the consumer behavioral aspect? It has an impact on banks and NBFC. They will get their job right done. But then what about consumers? What is the aspect that they need to learn from here? Obviously, having the right repayment strategy and not going much for unsecured loan is definitely a takeaway, which also is a part of your financial planning that one must be factoring in. But then as far as the entire mindset, of having easy access to money or loan on one click, do you think that this will really create a difference over there?
See, the RBI is saying that there should be no over exuberance. I think that message is both meant for the lenders and for the consumers. And I think you hit the nail on the head, right? Saying that pre-COVID, in COVID now, it's always been about prudence. So credit is a very powerful tool, right? In my mind, one click is not a bad thing, right? Because one click means wherever you are in India, using technology, using secure data, a transaction can be processed. So I think one click is fine. But the issue, right, is are you borrowing money which you'll be able to repay? Again, I feel that if you've been approaching it the right way, you've been paying all your EMIs in time, you've been using that credit for a purpose that's taking your life forward, right? If your credit score is above 750, I think nothing is going to change. I think if you've been taking a lot of these loans, you've been struggling with paying them back, you're rotating your loans, your credit scores come down below 650, there I think this is a sign the RBI is giving that don't take too much risk. And the RBI governor said it very well when he called it out yesterday, right, at the FICCI meeting. So he actually said that we need to make sure in good times that we build the right risk practices. So still times are good, right? Growth rates are high, loss rates are low. But he called out that in good times, we should put in place the best practices instead of getting carried away. So this is, I think, a message to the consumer saying, be prudent, be careful about how you use your credit.
Do you think this will also lead to fintechs coming up with a much more secured product category or a secured way of going all about?
So see, here's what's going to change, right? Because it's a waterfall. The cost of capital you rightly called out for the bank is going to increase. The bank is lending to the NBFC in many cases. The cost of capital, of holding capital, is going up for the NBFC. The NBFC is then working with the fintech. So the cost of capital is going to go up for the fintech for sure. Now, I think two things are going to happen. A fintech can either choose now to make sure that it doesn't go after the risky segments. So stay away from any segment like what we've been saying, some high growth rates, very high growth rates in the 10,000 rupee unsecured loan. A fintech could probably say, I'll stay away from certain risky segment, or like you rightly said, a fintech can go into more secured products. But keep in mind, right, that secured products, the risk weight has not been changed today, but that doesn't mean that it will not be changed 3 or 6 months from now. So the RBI has also said that, saying they're constantly assessing, and wherever they see risk building up, they're going to take action. So my call out is consumers just keep up that credit score prudence. Because if today you're sitting on a credit score above 750, you're doing things right. Make sure you stay there. If your credit score is between 650 and 750, start doing the prudent things. One, start checking it. Two, make sure your loan and EMIs are paid in time. Make sure your credit card bill is paid in full. And as you start building your credit score, right, I think you're going to find that there's more than enough offers and business loans and home loans and credit cards available for you.
All right, so one last question and then we'll wrap up this segment, Adhil. So ever since this news has come up, a lot of viewers have actually sent us a question asking which is the best personal loan rate that you can recommend to us, or where can we just go on looking for it, where we can get the most affordable prices. So what would be the right way to go about it? When will we be seeing all these things being translated in personal loan rates coming up from the banks and NBFCs?
We get this question all the time at bankbazaar too. So I think it really depends upon one's credit profile. The reason I'm finding it hard to give you an exact number, right? I'm sure there's some people who are listening who are salaried consumers with a credit score over 750. They're probably going to get a loan at 11%. There's also going to be someone, right, who's got a lower credit score, or maybe someone who's not working in a salaried job, and they're probably going to get a loan at 17%. So it's really hard for me to give you an exact answer, but I would say that today you have brilliant tools. The banks provide it, NBFCs provide it, fintechs provide it. So check, right? And RBI has done a very good thing where they have made it a rule, a digital lending rule, that a lender has to give you a key fact sheet. So the key fact sheet will take all the fees, all the interest, and exactly tell you, right, what interest IRR you're paying out there, or APR you're paying out there. So I'd request you spend that time to research, right? We spend a lot of times researching everything we want to do. So even in your personal loan, just do a little bit of research and you'll figure out what the best one for you is.
All right, I think that will be all. Thank you so much, Adhil, for being on the show and helping our viewers with this very important topic today. Thank you.
Thank you.
All right, time to slip into a quick break, but then post that, let's have your mutual fund portfolio queries answered by Anil Rego. But just in case you want to note down our WhatsApp number and email ID, where we keep waiting for your query so that we can do your live financial planning. That's the number on your screen, our WhatsApp number, and the moneyshow@etnow.tv. That's the email ID where you can send us your queries. A quick break and post that. Let's connect with our viewers live.